Hi there. Welcome to the first lesson on investing. So what is investing? Investing is using your money to buy assets. If you remember from the net worth lesson, an asset is anything that makes you money. As the asset grows in value over time, you use it to buy even more assets and increase your net worth. What are some common type of assets to invest in? You can invest in stocks, which means buying shares in companies, and share in their profits and growth. You can buy property and rent it out to make rental income. You can buy commodities such as gold or oil and wait until it goes up in value. So what will be our chosen asset? We are going to discuss investing by buying stocks using exchange-traded funds. In simple terms, this allows you to buy a piece of many companies at once, at a very low cost. The stock market is risky, but generally gives you the best returns in the long term, is cheap to get started, and can be done from the comfort of your phone. So why invest? Money in the bank is not as safe as you think. Inflation eats away at your hard-earned money. Say you have $100,000 in the bank and inflation is 6% this year. That means your money can only buy you stuff worth $94,000 now, as it lost 6% of its buying power. You need to put your money somewhere that beats inflation, and that's where investing comes in. Investing in the stock market generally gives you the best returns over the long term. The stock market returns around 10% on average per year. This means even if inflation is 6%, your money still grows by 4%. This is also why for long-term goals, most savings accounts are not good, as they don't give you enough interest to beat inflation. How do we buy ETFs? Find a platform to invest in. The most popular one in South Africa is Easy Equities. Note that the money you make from investing is taxable, so you will need a tax number. Now that you have a platform to invest, deposit some money. Use the TFSA to build your portfolio, as all your growth will be tax-free. If you have more than $36,000 a year to invest, put the first $36,000 in the TFSA and the balance in any of the other accounts. So what should we invest in? As the average person, we don't have time with our jobs and lives to babysit investments. We need a way to set it and forget it, and let it make money for us. Everyone wants to invest in their favorite companies such as Apple or Tesla, but to do this well, we need to know a lot about the company's financials, which is very complicated. If we invest all our money in a single company and it goes bankrupt, you will lose your money. So how do we own all our favorite companies without taking the risk of putting your eggs into a single basket? Simple, you own the entire stock market. Some ETFs track an index which has hundreds of companies. For example, the S&P 500 ETF tracks the 500 biggest companies in the United States, including your favorites such as Apple. By buying this, you own a piece of the 500 biggest companies in the United States. Even if one goes bankrupt, you will be fine. The index automatically changes if one of the companies does bad. It kicks it out and replaces it with the next company in line, so you don't have to do anything. Things to note. You need diversity. You want to invest in ETFs that track many companies and in different regions. You can even invest in bonds, which basically tracks all the loans a government or industry lent out. Bonds have lower returns than the stock market, but it doesn't have as much risk. If you want a way to invest in real estate without having large capital to buy houses, invest in REITs. There are many ETFs that may have an S&P 500 index or any other index. Find the one with the lowest fees. Markets go up and down, so don't babysit it. If the value of your portfolio drops, do not panic. Wait for the long-term returns. Investing is tricky. Please leave a comment if you need more help. Stay tuned for Investing Part 2, where we build a portfolio of ETFs.